In this video, we'll show you a few adjustments you can make aside from adjusting the transaction assumptions. Under column E in the Operating Model tab, our drop-down option for the basis of the forecasted financial figures. As an example, the projection method for the sales accounts is based on year-on-year % growth, and the column beside it contains the number to be used as basis for the forecasts. In this case, let's say we believe that the YoY growth for fintech and data will be 12% and 9%. We simply change the input cell to 12 and the forecasted financial figures will then be updated by the model automatically. Let's have another example by looking at expenses. The input logic is the same, but this time, the projection method is based on % of sales, at default, and beside the column are the input cells for the forecast figures. You can also change some of the projection method to other methods available in the drop-down. As an example for this company, let's say we want to make projection method for awards and event costs constant instead of based on % of sales. We simply click the drop-down arrow, then change the method from % of sales to constant. We then have to refer the value to our latest actual expense for this account, which is 71. You can then see the forecasted amount be updated automatically. That's all for this video. These are just some of the sample inputs adjustments. Although other accounts might belong to other financial statements such as the balance or cash flow, the same input still logic applies, which makes the LBO model easier to use. Thank you for watching.